I am very pleased once again to bring on board AJ from somewhere in the world. Nobody really knows exactly where you are, AJ, at any given time.
Yeah, it does change periodically. So, but as long as I'm in a time zone that is conducive to the American market, I'm okay.
There you go. There you go. And of course, just to remind everybody that AJ prefers to maintain some anonymity. Now,
Yeah.
possibly you recognize his voice or his accent, but but he's not going to give away his face, at least not at this time. But we are, as have said before, very appreciative, AJ, for all the work you do in putting together very detailed analysis of Tesla and other companies, competitors, and even some companies that are outside the sphere. And this morning, what we want to do is we're going to take a look at everybody's been looking backwards for the last 2 days. So now we'd like to look forward, like to look at what the quarter that is coming up with regard to Tesla. So I've allowed you to share the screen. You want to put some stuff up?
Yeah.
I know that some people probably won't be able to sit for the entire video this morning. Maybe we shouldn't bury too many of the leads. Are you expecting an improvement in the fourth quarter?
Um, there will be a very massive improvement.
Okay.
Um, I have no doubt about it. And basically, um, I think maybe it's worth just briefly recapping what happened this year, and how we ended up in the place like yesterday,
Oh, okay.
because a share price explosion, you can't really use any other term, of over 20% on a large cap, a well-studied, well-covered stock, is extremely unusual in the stock market.
Right.
And there's only a handful of companies who ever pulled something like this off. So
Right.
so 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 that's why I would like to sort of recap very briefly what happened.
Okay.
First quarter, we had a massive miss. Why? Because there were a number of factors, negative factors, that came together. They were all one-off. There were logistical problems. There was the Red Sea attack, this limited global vehicle shipment capacity, blah blah blah. Arson attack on Berlin. Berlin shut down due to part shortages. Um, Fremont M3 ramp, a lot of stuff.
Yes.
So we had this. So this was a kind of a started the 23, let's call it depression, a TSLA depression.
Right.
But these were all kind of one-off stuff, and 2Q proved that, with a massive recovery, um, significant improvement in deliveries, etc., etc. But 2Q, and now I'm talking about the calendar 2Q, is was suffered severely from the uncertainty around Elon's comp package. A lot of concern, a lot of investors were concerned that if he lost the package, he might be less committed, or God forbid, might even leave Tesla, etc.
Right.
So there were all this stuff out there, created enormous amount of uncertainty. And if you go back to X and check, there were a lot of perma Tesla bulls who even started to sell TSLF for the first time. So
Right.
I think this is very important context to always remember where we came from. So where
Okay.
there were all this, I would call it temporary depression, and now 3Q blew everybody out of the water. And
Right.
and the share price explosion is absolute evidence of that. You cannot have a over 20% increase in the stock if anyone would have expected this. No, basically everybody was caught off guard. All the Tesla community analysts, all the Wall Street analysts, nobody had this on the radar, and that's
Right.
why the stock completely skyrocketed. So now we're basically arrived at today, at the present.
Mhm.
So now let's look forward what's happening. So when you listen very carefully to the guidance Tesla provided, and they provided, by Tesla standards, very specific guidance for Q4.
Now,
Let's
let,
start with
let me stop you
yeah,
there. it was very specific guidance in terms of Tesla's normal guidance, but wasn't it one of the most elaborate and detailed sets of guidance that you've ever heard on a call?
You mean across a broad spectrum of companies?
Yes. Yes.
No, absolutely not.
Oh,
I know companies, they literally tell you, okay, this is going to be the revenue next quarter. This is going to be the COGS. This is going to be the tax rate. This is going to be blah, blah, blah. And you can literally take their inputs and you can reconstruct the P&L, and you have basically hardly ever a 2% error margin on the EPS.
okay.
There are companies like that.
I guess,
I even know companies that give you monthly their top line.
yeah. Okay. Okay. I guess I was not I may have been, I set the question up wrong. As opposed to numerically, in terms of a vision, in terms of laying out the plan, in terms of the strategy, it seemed to me to be very elaborately put together.
Um, I mean, a lot of companies in their specific area, etc., they provide vision, etc., depending on the CEO character. So, like from a meta perspective, I don't think there was any outlier in that category.
Okay. All right.
But then when we go away from a meta perspective and look at the exact things that were said, they're just bonkers crazy. So that's why the stock trades at, I don't
A high
know how to
multiple.
say,
Yeah.
yeah, very, very high multiple, and there are a lot of very good reasons, etc. So the division is very grand, etc., and exceeds probably most companies.
Right.
But in terms of setting out a vision, this is very common. You find this even in some, I don't know, insurance companies
I
even,
see. Yeah. Yeah.
that they say, oh, I want to be AI first or stuff like that.
Okay.
Anyway, but the thing here is it's quite so when you go through like what the sort of guidance, there were a number of very interesting things, and then also when you look at the guidance history, so not just the 3Q guidance but also on 2Q guidance, so there's a very consistent path, and one very interesting piece for 4Q, and then maybe after 4Q we can talk about 2025, but
Mhm.
4Q is the energy storage deployments.
Right.
The CFO said for the second time that they expect to at least double 2023. And when you run the numbers, you need almost a new all-time high deployment. But here's the thing: they already said the very same thing in 2Q.
Right.
So very confidently, and this confidence gave me kind of pause. If you knew kind of 6 months ahead that okay, we're gonna more than double,
Uh-huh.
then you have a very strong view on not only the pipeline, of course, which we know is very strong, but also in terms of revenue recognition, because this is kind of the missing piece always when you try to forecast the energy deployment. When can you actually recognize the
Right.
revenue? Because this is not a trivial point in large energy projects.
Right.
But because the CFO has been so confident for so long, I actually they I actually believe they will hit another all-time high in deployments. And 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 so this is one piece. The second piece is that the margin moved up a lot. And you have to keep in mind the megapacks, this is like a commodity kind of product. It's a B2B business.
Right.
And you're not supposed to see on such industrial goods like a
Percent.
30.5% margin. So this was nuts. But then when you look at sort of the customer economics, it makes completely sense. It's in, in depending on the country, etc., and the energy prices and how energy prices work. These mega packs, they're basically money printers
Right.
in certain regions, and that's why one um, paying a high price for mega pack is a kind of a secondary consideration for a lot of these companies that deploy them, because the margin is so high they can earn on them relative to their other business, because most of these customers are utilities.
Right.
And so that's one point. And the second point is that, and this is something Tesla said on this on the 2Q call, they had situation where basically customers went with a competitor, but then ultimately they changed course and went to Tesla because the competitor simply couldn't make it work, basically.
Right.
And Tesla helped out, etc. So I think Tesla is building really a very strong business here, and the margin is just insane. And so and also when you then add this together with what Elon said about the outlook, the ramp of the Shanghai factory, the output, the current American, the only company in America can generate next year is going to be completely nuts. And but anyways, I'm already moving into 2025. There's a lot of other stuff in. It's not only energy that is very exciting for 4Q. Tesla really managed to bring down costs in an incredible way, which was one of the main drivers for my significant EPS miss. And it's we already know that the costs won't go up in 4Q, because when you look at all the material prices, lithium prices, and all this stuff, it still looks low.
Right.
And so there hasn't changed much. And then even if spot prices would spike tomorrow, there's a lag effect. So we already know material is going to stay low. So there's no real variability here. The only variability is really that it could go down even further.
Right.
And
Right.
so more upside. So anyway, this is all very nutty. And then also Elon provided a very rare, relatively specific delivery guidance.
Yes.
He said that he expects a slight growth over 2023.
Mhm.
So because we have the first 9 months, we can easily work out what that would mean in terms of 4Q deliveries. And keep in mind, 4Q is only 10 weeks left.
Right.
Or yeah, not even 10 weeks. And so and of course Elon has daily global order flows and things like that, and there's a lot of sophisticated forecasting going on in these companies, and they have a ton of information laymen can only dream of to have.
Right.
And so he has a very good view of at least a couple of weeks out. And if he extrapolates the trend, and you have to keep in mind, he knows all this stuff by country. He knows how regulatory regimes change, incentives, blah, blah, blah. This is all very granular data. All these teams will compile and in their submission for the corporate center to compile the global outlook.
Right.
And in the reporting to the senior executives, this is very standard, basically all companies. And so he had like of course, the best view. And of course, he has been overly optimistic before, but before, when his guidance was a little too optimistic in terms of deliveries, he had like he was the economy was like in a different state. We were facing with rising interest rates, decreasing affordability, blah, blah, blah. But right now we're actually facing the opposite. We are actually facing a increasing affordability, and this is significantly driven by falling rates. We had a few weeks back the first 50 bips rates cuts. The next rate cut is likely just 2 weeks away.
Right.
And the first 50 bips has not really made its way through the system. There's also some lag effect. And so the really the effects of the first rate cut, we will only basically find out now this quarter. There was no impact last quarter effectively. So anyways, there's a lot of stuff that really helps Tesla. Affordability is critically important for vehicle demand. And then also there are other factors like used car prices stabilizing. And there were some effects from peak prices. People, because of the high depreciation, they lost a lot of value, had to hold on to the car longer. These effects also slowly start to unwind. That's why right now we are probably, except for a recession, of course. But if we don't have a recession, we might actually go right now to a little trough, which might be unwinding soon. But anyways, so long story short, Elon has probably loads of information which make him optimistic, and that's why actually I will be changing my outlook for 4Q, and I will revise it up because I first tabled like 491K. I applied a little haircut to the implied guidance from Elon, but then I thought about it. Who am I to say I know better than Elon? It's stupid. And I will just basically take his guidance. I will not add anything. I will just assume 2024 will hit 2023. So
Okay.
I basically still add a tiny bit of conservatism, but my next release will include that. So I stop here for a moment.
So I wondered when I saw your numbers last night on X, that I saw you gave that haircut, and I thought to myself, and I actually said this on my show last night with Bradford Ferguson. I said, I think that Elon is going to make this number if he has to stand out in the middle of the street and sell the cars one at a time.
Yeah, exactly right. And they have enormous levers they can pull, and
Yes.
people always looked at China and Europe and of course the US, but the rest of the world has also become a meaningful factor. So
Right.
there are four regions you need to look at, and some of these markets, they have very high volatility, like several thousand units in a month.
Right.
So there are, so, and again, it's very difficult to track all global markets because all kind of needle moving markets is a very large number, and to keep up with all the incentive changes and all this stuff is not a trivial exercise. And of course Elon has all that information, and
Sure.
that's why, especially after the 3Q print, it might be better not to be too cautious this time.
Yeah, yeah. Okay. All right. Okay. So what are we looking at for the fourth quarter then?
Yeah, so my last, so basically from yesterday, I came out in the 90 cent range. Um,
90
it,
cents
it,
from
yeah, no,
73.
it's actually higher.
Yeah.
I think it's 92 cents where I ended up. Um, 93 cents. But I already put in that release that this was an interim version. It's incomplete, because some smaller P&L items were missing even from that. For example, um, calculating properly the interest expense line
Okay.
takes actually a little bit of effort because you need to work out the asset yield and other things. And it's not actually as trivial as people assume. So that's why this was like a preliminary estimate. But the big item, of course, is now that I move up my deliveries estimate,
Right.
there will be an impact there. And so it will, rough guesstimate, we might be looking at roughly 95 cents,
Wow.
where we might end up. And this would be a massive increase, quarter over quarter again, because we are coming from 72 cents. Actually, the precise number is 71.6.
Okay.
When you calculate the quarter on quarter percentage, it makes a little bit of a difference then. And yeah, anyways, so basically, I often think about, okay, when I look at when I calculate a forecast, and I see the result, okay, what would the headline be?
Hmm.
So, and the headline right now is basically significant earnings increase quarter over quarter. And yeah, and just overall, Tesla stands out because a lot of people still look at Tesla in terms of an automaker, but basically every automaker is right now hurting.
Yeah.
And Tesla does actually phenomenally well, especially when you start looking at things like cash flow. Cash flow situation globally is quite dire. I published a very comprehensive report based on 2Q numbers a couple of weeks ago. I will do the same once we have a full set of 3Q numbers, which we're going to take a couple of weeks. But the cash flow is like basically completely, like if you add up all the pluses and minuses across the global auto industry, it basically shrank to nothingness
Wow.
almost. So it's quite a dire situation, and the factors are obvious. A lot of companies are losing volume, market share. Margins are being squeezed. They need to discount to compete to keep some volume. They have high expenses on basically transforming the factories into more EV production, etc., etc. A lot of stuff, and then of course R&D expenses are relatively high. So across the P&L, across the CapEx landscape, they're all kind of pressured. And this is why, and then also when you kind of sort of cross-check with what global tier one suppliers to OEMs say, they also expect like not a great year in 2025. So basically, the auto industry is in enormous pressure, and it's basically driven by kind of a slowdown in sort of market growth. The people who report wholesale sales like Ford, GM, but also a bunch of others, they have the problem that they can't channel stuff anymore. Their dealerships have returned to normalized or slightly above normalized inventory levels. This is also not a buffer anymore. So there's all this stuff going on. And then you have the Chinese, partially boosted by subsidies and other things, taking market share globally. It's not very pronounced yet in Europe. Actually, Chinese makers have a relatively low market share, and the US market has effectively been closed to Chinese through tariffs. But when you then look at sort of ancillary markets, South America, Chinese taking significant market share there, and also other parts in the world, and all this is like basically a lot of there's basically just a lot of stuff coming together that hurts automakers, and the only ones that right now kind of look good is the ones that shrank back into a protected niche, and the prime example of that, probably together with Toyota, is not Toyota, not I take that back, is General Motors, because General Motors has effectively become an exclusively North American vehicle seller. General Motors, but anyways, this call is not about General Motors. I'm digressing. It's just a useful example. But long story short, global auto is under enormous pressure, and for Tesla to print such an amazing 3Q makes it even more outstanding. And I think because I studied the global auto market so intensively, this created an enormous bias, and this was actually a big reason why I missed by such a margin this time around.
So AJ, I've been asking the question for a couple of days about this big miss. Fortunately, I stopped participating in the competition a couple of quarters
Yeah.
ago because I probably would have missed by the same amount. But in terms of the miss, how much of an impact do you think the miss, how much of this miss had to do with the income?
FSD,
F,
revenue
no,
recognition.
not FSD. Well, that would be one also. Let me start with the other one though, which is the IRA money that's coming in for the batteries and the battery packs. I calculated that at just short of $100 million just for the 4680s that are going into the Cybertrucks.
Yeah, so that is a very good point. That makes a big difference.
Yeah.
And but from what I have seen, I don't follow other analysts, not really comprehensively, but I have seen from some of the investment banks some reports about that. So they arguably had this on the radar,
Okay.
but apparently either they were off, or other factors just had a much bigger much bigger impact, and them accounting for this item was still not enough to be more accurate. Let's put it this way.
Right. Okay.
But
And
but
then, okay, go
but
ahead.
this is a very good point. And if you want to actually, paradoxically, if you want to learn more about this topic, I highly recommend reading General Motors recent investor day presentation, and reading the transcript, because they talk, actually they drop some interesting bits and pieces about this. But of course, you should not be surprised. That act was basically written by General Motors.
Right, right, right,
Let's be honest.
right.
Let's be honest.
And then
This was basically perfectly fitted for them.
going forward, I know you've done some analysis all the way into 25, and I want to talk to you about that in a minute. But going forward, the IRA money for the batteries and the battery packs if Elon is even close to his estimates in terms of 4680 increases in the total units, and then
Yeah,
probably another 40 gigawatt hours coming from the CATL
yeah,
line that they're putting in Reno,
yeah,
we could be looking at $1 billion a quarter in C8 in IRA credits just for batteries and packs.
yeah. And I think slightly veiled. I think Elon hinted at this when at the part when he was talking about battery cost.
And
And
and then people are not taking into consideration, most people probably don't think about the fact this is a cost of goods item. So
yeah,
it's part of the reduction in cost of goods.
correct.
It doesn't show up as a separate line someplace,
Yeah,
covered by
correct.
income,
Yeah, this is also this is in line with my understanding,
Right.
and this also kind of makes the most sense in terms of accounting, how you would sort of reflect it. Um, yeah, so there is this is okay. There was probably a big benefit from the mix this time in terms of average cost reduction, and I'm talking about China. China, of course, has a lower cost in making Model 3, Model Y, because labor cost is significantly less expensive than in Texas or in California. Plus, the supply chain is structurally, you can procure components just cheaper,
Right.
bottom
Yeah.
line.
Yeah.
And that's why they can make cars cars that look like real cars and that have actually a 5-star crash rating for $10,000. And
And
anyway,
let me just use an analogy that most people just won't be aware of, that I have a little bit of special knowledge on, and that is in purchasing inexpensive, plastic products, let's say from China. Most people would think, oh, it's all about the labor costs and it's all about, no,
no,
the reality is that the big deal on low cost items, like I've been purchasing from China for 50 years, is that it is the packaging, the freight is a big issue.
yeah,
So the packaging, freight, and then the requirements of intricate what do you want to call it? The mass market requires a very intricate way of putting on all the barcoding and whatnot,
yeah,
packing on pallets and for Americans to do that kind of detail is way more expensive than it is to do in China. So you have these little aspects. Plastic costs the same in China as it does the United States. Steel costs the same as in China as it does the United States. But you take out those kind of things, and then you take out the cost of the property, the building, and what the owners need to make in terms of profit, and all of those things are impacting that final cost.
yeah.
Um, those are some of the things I think that most people are not aware of in terms of why it's so much less expensive in China than here.
Yeah, exactly. And depending on how far refined or manufactured a product is, because for example, if you take a NVIDIA Blackwell, it has like tens of thousands of components, and a lot of and depending on how you look at it, some of these components have subcomponents. So there is like a huge amount of stuff. And when you look at at who is involved. Like you don't have one or two layers. Like a tier two buys from a tier three, buys from a tier four.
Right.
No, you have sometimes layers that can be when you go down to the silicon mining. I know this gets quite crazy, but you have like hundreds of layers,
Yeah.
and everything compounds. But if you generate a product in a structurally cheaper country like China, you have all these compounding effects that are all a little less, and so it makes certain product like ridiculously cheaper compared to like when you have like a mostly European supply chain or American supply chain, which by the way don't exist anymore,
Right.
because at some level our our supply chain is based on their supply chain in basically almost any product at this point.
Right, right. Okay, so the second thing, as you were going to point out, that I think most people are not looking at is FSD take rate. What
Yeah,
do you think is how much of an impact do you think that had on those earnings Wednesday?
yeah. So I was actually working on this point, and there were basically two things. Tesla has not really meaningfully increased the FSD reserve release. It's broadly in line with prior quarter, maybe slightly higher, but no needle mover. But they had a one-off item from they they released a lot of the Cybertruck FSD. I'm not exactly sure why they disclosed it separately, but anyways, it was like I think from memory 322 million item,
Right.
which also included the the actual smart summon.
Yeah. Mhm.
And so this was a comparable one-time event to 1Q. In 1Q, there was also a feature release that had a one-time release, but I think at the time CFO did not disclose the exact amount. I believe that amount was a little less than the 322 million this time around. So this, of course, was a margin booster because it's basically pure profit. Um, yeah, but so this was helpful, but then also there were also big negatives. For example, and this is something I'm still working on, there was like 270 million other expense item.
Hmm.
So which basically almost wiped out the 322
Right.
one-time effect from Cybertruck FSD as release, right? And then there was another 55 million of restructuring charges. And by the way, having every quarter restructuring charges is not normal in Tesla's history. Having two successive quarters with restructuring charges happened, I think, only once or twice in their history. So everybody expected no restructuring charging, including myself, but there was a little bit more. So long story short, if you take out these two, what looks like one-off negatives,
Mhm.
it basically canceled out the positive from the from Cybertruck and S release, but you don't see it in the margin because the other expense line happens below the auto margin. Just
Mhm.
to be clear, and below the operating income margin.
Right.
So you only see it once you look at the profit before tax margin.
Right. And then in addition to that one-time item on the Cybertruck, though, I was thinking in terms of the overall take rate. Elon says that
Yeah,
the take rate has been going up, obviously, as
yeah,
the product gets better. So we would also see margin improvement because of more FSD being.
yeah, yeah. And there's one important detail. Elon said that they saw a significant increase, especially after the 1010 event. This means we had zero impact in 3Q.
Right.
So all the numbers we are talking about were before that effect. So that's also another probably less important but still positive effect for 4Q.
And going forward, as FSD gets better and better and better, then you would expect more and more people to take it.
Yes, it is a logical conclusion.
Right.
Because if you see a trend as the product improves, it would be completely illogical to all of a sudden assume, oh, now it's better, fewer people are going to buy it. It would be silly.
So then as we go into quarter one, quarter two, as we're doing our projections, we would expect to see some improvement in margin just from FSD uptake.
Yes, this is what all the roads lead to. Logical conclusion, and Elon spent, I think, quite some time on this point. He said 2Q is basically the internal timeline. Yes, everybody knows he was too optimistic before, and then he said he used to bet this is not sandbag, this is simply the internal target. They expect FSD to be better than the average human in 2Q. This is very, very close. This is not far out. I'm happy to hold the stock this long and maybe, I don't know, suffer a pullback. I don't care.
Yeah.
But if they can pull it off, and even if they have like a 1 or 2 quarter delay, this is looking really attractive here.
All right. So we're looking at 516,000 cars for quarter four, which would be what we need to get to the same number as last year. We're looking at 95 cents maybe in terms of earnings.
Yeah.
Would be way above what the street is estimating now. Do you think?
Uh, I think, so sorry to interrupt you, but I think as we go through the quarter and hopefully we get weekly China sales numbers and good numbers from Europe and maybe a better quarter in US, I think they will move up. But something I'd like to emphasize here, when you look at these consensus numbers, most analysts, especially the ones that work for big Wall Street banks, they don't periodically, they do not frequently update their forecast.
Right.
There's the earnings call. Quickly thereafter, they push out the notes to their clients, and their new estimate is reflected in the consensus on Bloomberg and FactSet, etc. But then there's basically a couple of weeks, no matter what happens, except it's like an extreme outlier event, there is no update. So the longer you go through a quarter, the more stale the consensus gets, even if you have like great delivery numbers, blah blah blah, because the analyst just simply doesn't every week update the EPS estimate, even if you have like a blowout weekly China number or whatever. So you basically have to keep this in mind. The consensus is only relevant like in the last week before deliveries,
Right. Right.
and 1 week before the earnings release, and then you can look immediately in the first at the consensus, but then as you move away from these event points, it becomes stale. Because I always hate on X when I see like these community analysts that after like 10 weeks into the or 8 weeks into the quarter, they show, oh look, here's my estimate, and then compare it with a completely stale consensus,
Right.
and try to look later smart by pointing to this comparison which had like an 8 weeks data advantage. It's ridiculous.
Yes. All right. So now, if we, so that's the fourth quarter. As we move into the first quarter, typically the first quarter sees a little bit of a relaxation in sales.
Yeah.
Are you anticipating a relaxation in sales, or do you think that this Cybertruck increasing productivity, I mean, increasing what's the throughput, as
Yeah,
it
yeah, yeah,
the
yeah.
ramp. So
So
yeah,
I, I
getting
I absolutely 100% expect a pullback in deliveries, and because seasonality in the global car market is a real thing,
right.
period.
Right.
And the what makes the pullback so pronounced, especially for someone like Tesla, and perhaps this time even more, excluding the one-off from this year's Q1, is the fact that China has become a larger share in Tesla's vehicle units.
Right.
You can clearly see it in the trend. But China has every first quarter a massive pullback because of two factors. One is Lunar New Year, and this basically were for roughly 2 weeks. Car sales just tank.
Right.
There are a lot of cultural reasons. People go on holiday, has to do even, I think I was told, with feng shui a little bit. Anyways, long story short, Chinese don't buy cars during that period.
Right.
There's
Right.
still a couple of sales, but it will tank sales. And the reason why this is so important is because China is such a big market, and you simply cannot um,
Pick it up. Yeah.
cannot cannot make up in other markets for that massive drop in this giant market. That's point one. The other effect that affects all large market is winter. People simply don't like to buy cars in wintertime. There's salt on the road, there's snow, depending on where you live, blah, blah, blah. Not everybody lives in California, and Californians like to forget that. And so yeah, it's just true. Look at the data, it's clearly visible. Look at Nordic countries, and most of Europe is basically relative to California, a Nordic country.
Right.
And in terms of climate, so you have a massive drop in Europe, in all the large European markets, Germany, UK, blah, 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 France, Italy,
Right.
very common. And you also see it a typical pullback in the US because in Michigan, Wisconsin, yada, 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 people also buy fewer cars because when it's like snowing and cold and ice everywhere on the vehicles, who likes to walk around in the dealership looking at the cars outside, which you can barely see because all the snow on them.
Sure.
And so, anyways, it's a real thing. I know it sounds a bit funny, but you can see it in there. So, bottom line, expect a pullback. And should you see some stupid headlines and some stupid share price reaction, this is always an amazing buying opportunity. For example, when I saw all this stupidity in early April after the massive drop, I loaded up.
Yeah.
I massively loaded up because I saw, I looked up the freight, I looked up sort of the shipping, Tesla's ships, etc. You can track this on the internet. And I saw, holy moly, they had to go around here and they could not arrive in time, blah, blah, blah. So I knew Tesla simply couldn't ship the vehicles. And that's why they couldn't recognize them, because the customers couldn't receive them. Hence, it was an amazing buying opportunity.
Yes. I
Anyway,
always love arbitrage. Information
yeah,
arbitrage is always the best.
you can so massively increase your share count. It's incredible. It's insane.
All right. So the first quarter, and then in the first quarter also there could be some changeover on the Model Y line as we go to Juniper.
Yes.
They switch because they got four different factories need to switch
Yeah.
over to Juniper, so it's going to take some time. What then? So might get some increase from the Cybertruck, not only ramping in the first quarter, but also from the profit margins on the Cybertrucks improving in the first quarter as well.
Yeah.
Where are you coming out on the first quarter? Do you see a drop off from that 95 cents, or do you think?
I yeah. So I haven't modeled the 1Q yet.
Okay.
This is because I want to model the not only 1Q but also every quarter next year.
Okay.
I do like quarterly forecast,
Right.
but this takes more time because I have to think about a bunch of stuff, because then I have to look at capacity in the factory. And anyways, so this will take a little bit of time, but once I've like my full 25 forecast, there will also be on a quarterly basis like all the numbers, and you can also see then the APS where I come out. But right now I don't know, because for the 1Q, so that there's one very, very good global automotive research firm, but it's incredibly expensive, and so only it's used by corporates. It's like 100,000 K per
Wow.
year. But I might get access to that, fingers crossed, soon.
Yeah.
And that would then massively improve my research accuracy, and especially for the 1Q, that would be very useful. They have very sophisticated models, and they basically they they combine a huge number of factors, and as a single person you simply can't replicate it.
All right. And so, AJ, I have a couple of questions. Number one, I've been asking everybody, and you are in a particularly good place to answer this question. What after that call, after that earnings report and that call, what are the other automakers thinking? What happened in the C-suites of Volkswagen, Toyota, um, uh, Hyundai, etc., around the world on Thursday morning after that call came out? What did they have to be thinking?
I think in general, you probably can divide the automotive world in sort of into two camps. Just like you can divide probably most people into camps when it comes to Elon and Tesla. Some love the company, some love Elon, some hate Elon, hate Tesla, etc. And I think you will have probably, due to all the stuff you read constantly, etc. I think you probably see something similar in sort of C-suite. That there will be some people who have their ego in check, and they will recognize what Tesla has delivered and achieved, and take Elon very serious. This includes basically all the Chinese, all the Koreans, Hyundai, Kia, and I think the Japanese C-suite is still sort of Toyota. They are still I don't know. I would call it a denial phase, because they're still trying to write this alternative propulsions thing, like, oh, it's going to be hybrids or e-fuels or all this nonsense. And the only reason why they can do it, because if we talk about Toyota completely owns the Japanese auto market. They have significantly more than 50% market share. If you count everything, everybody else is so small that they can never be a threat to Toyota, because they occupy too much of the market already. And then, of course, because it's basically the largest. If you count all the direct and indirect employment in Japan, Toyota is basically the most important company in Japan. So politicians will make sure the company won't go under, because it's just too important, blah blah blah. So long story short, this is like their own little world, and that's why they're going to be in deep trouble not very long from here. And then when you look at sort of General Motors, Ford, Farley gets it. Farley is actually incredibly honest, I have to say, for someone in his position. Sometimes I think he's like too honest, and sometimes I thought to myself, when I heard some stuff he said, "Oh my God, once your chairman sort of finds out about it, he's not going to be happy about that statement." And but anyways, so Farley gets it. Deep respect for Tesla. He will be very worried. He knows Elon gets stuff done, and if robotaxis hit the road, big problem. I even think that the skunk works that and by the way, they call it like that. It's not something I made up or I labeled. The skunk works they launched in California might actually be in conjunction with Tesla. They might actually develop a Ford vehicle that is set up for robotaxi future.
Wow.
I right now this is pure speculation, but Farley talked about this. This is like a completely separate unit from all of the rest of it. He even recently said on a podcast, his badge doesn't even get him into the facility.
Oh, wow.
He doesn't have the authorization, basically. So this is like completely separate unit, completely confidential from Ford, and they are working on something that like they try to make truly competitive. Whether they get there is a completely different story, but this is a very interesting approach. I think it's the only way you can actually mount any type of competition. You cannot do it in the existing organization. And this is something clearly General Motors has not yet understood. They are just shrinking further back into the higher priced vehicle segments. This niche is not infinite, and their dealer capacity is running low. So next year, I think there will be a big reckoning in General Motors. But anyway.
Okay. And then the last question you mentioned this morning, you said you gave not investment advice, and you were very clear on X, but what do you think in terms of the share price right now? I haven't looked recently, maybe you have it in front of you.
Well, it's still, let me check the clock. I think it's still, my computer just turned off.
In the pre-market, we're down 421. So there wasn't any significant sell-off overnight in the stock price. So you had a directionality in terms of where you think things might be headed
Yeah, yeah. So basically, I posted this earlier today to subscribers, and I basically, without going into a lot of details, I basically, so my view is basically, given what was presented in terms of financials in 3Q plus, and this is even more important, what they said, and also the proximity of the things they pointed to 1Q, 2Q next year, which is very, very close.
Right.
People should keep this in mind. This year is almost in the bag.
Right.
So yeah, you always have to zoom out a little bit and not just think like next day, or next week to next week. We're almost in 2025, and there's a lot of crazy stuff that's coming up, and we can see a lot of evidence already. So this is not some pipe dream. And so this is very, very exciting. And I think a lot of people understand this, and this is also precisely why we had ginormous volumes yesterday. And after a huge spike, there was still huge volume in above 240, above 250, at the 260, near the 260 range. This all shows me there are a lot of people, they get this was a complete sentiment change in the stock, and they also get that from here the downside is highly limited. And I would highly recommend people go to my profile and look for the PE analysis I did on Tesla. Tesla has consistently, for a very, very long time, always traded between around 60 to 70 times P, during the bubble periods significantly higher, but rarely below this multiple. So what this tells you is the moment Tesla adds a couple of dollars of earnings,
Right.
it gets a huge market cap increase. Like if Tesla adds 1 billion in earnings, you get 70 billion in market cap. And again, keep in mind, we're talking about annualized numbers.
Sure.
So 1 billion is only 250 million in a quarter. So you always have to keep these very basic valuation principles in mind to make sense of the stock. And I try to remind my followers all the time, even though I probably sound like a broken record or like a spammer or engagement farmer, but no, these are principles people need to keep in mind, but I constantly, even some experienced investors I see, completely ignore or forget about this fact.
Right. So you said, though, specifically, I think, if let me see if I can quote you correctly, you see a much more likely case for 20% up than for 20% down. Is that right?
Yeah, exactly. That's what I said. Of course, as ex-banker, I always caveat what I say. I said, absent any force majeure. So
Right.
basically, if is there any type of black swan event that nobody foresees right now, for example, in 1Q, nobody had on the radar that people would destroy a critically important power generator,
Right.
shutting down the factory for 1 week. Something I've never heard of in the automotive
Yeah.
world,
Yeah.
even though I
Yeah.
studied this stuff for, I don't know, decades. And plus the silly attacks from the shores in Yemen on
Yeah.
ships,
Yeah.
forcing the ships to go around Cap Horn and not through Suez, uh, reducing global shipping capacity for auto carriers. People should remember you cannot ship cars on every type of vehicle carrier, sorry, every type of container carrier. No, you need specialized vehicle
Right.
carriers, and supply is very limited. That's why BYD built their own ships. This is
Right.
true.
Right.
And yeah, anyway, so as a long story short, unless we have some crazy stuff nobody knows about right now, I think I do not see the stock going back to, like, 210 level or something. um, the risk that the stock runs and crosses the 300 line, I think, is much bigger than crossing the 210 line.
All right. Well, I promise to get you off of the recording here before the market opens. So we're right at that point. So people should, if they want to follow you, that would be ALOJAH, right?
It's ALOJOH.
OH. Okay. All O, and beginning with an A, but everything else is O's. Okay. A Lojo.
Yeah,
Ojo.
yeah, exactly.
Okay. All
Yeah.
right. That's what the
All right.
follow. All right. Thank you so much for coming on this morning, and may all of your predictions come true.
Yeah, I hope so. Thanks for having me, Randy. Take care. Bye.
Bye for now. And to all of you out there, it has been great talking to you.